Greetings, members, one and all of the Salivation Nation. These two things could send gold and silver prices tumbling. Let's explore. As we look at the markets right now, there's a pretty big drop in all of the metals, save for rhodium. Look at that. This is where we are at right now, very close to the close of the markets, where gold is down almost 2%, down $38. Silver is down almost 3.5%, down almost a full dollar. It is now flirting with high $24 territory. Platinum is down $46, and palladium is dropping like a stone. Wow, down over 15%, over 15.7%, down almost $435. Look at that. Insane. In the membrane, watching these metals prices drop. As I said in a prior video, this is a video that I think should have gone bacterial, if not viral, because there's one prediction I made that has been definitely evident so far during this present crisis, and that is the volatility of precious metals. You are in for that wild ride, and right now we are taking a roller coaster plunge with some of these precious metals prices, and there are two things that could send gold and silver prices tumbling and continuing to tumble into this week. And we're going to look at the first thing here, as gold and silver sell off as crude briefly dips below $100 a barrel. This is an article from Kitco News by Jim Wyckoff. We've seen gold and silver prices solidly lower. U.S. trading on Monday, as trader investor risk appetite is just a bit better to start the trading week. Crude oil prices have dropped sharply from the last week's 14-year highs, including NYMEX crude at one point today dipping below $100 per barrel. That's putting downside pressure on most of the raw commodity sector. April gold futures were last down $24.20. May COMEX silver was last down 78 cents as of the writing of that article. Also negative for the safe haven metal today, just as a bit of optimism on de-escalating the Russia-Ukraine war, despite the fact that it is still raging. In fact, it's intensifying. The U.S. and China are set to hold their first high-level talks since Russia's invasion of Ukraine. The White House and National Security Advisor Jake Sullivan will meet in Rome Monday with China's top diplomat, Communist Party Politburo member Yang Jiechi. U.S. officials say Russia has asked China for military aid in its war with Ukraine. This suggests Russian President Putin has faced more setbacks in the war than he anticipated. U.S. officials say they haven't seen evidence Beijing has tried to circumvent sanctions on Russia. The thinking that is if China and the U.S. show a united front on opposing the war, Russia may de-escalate. That's a pretty tough sell, though, I believe. However, others doubt Putin will back off and show weakness. Meanwhile, Russia and Ukraine are still meeting for talks, although there have been no major breakthroughs despite notions some progress has been made. This, I think, could be their fifth meeting, and this also comes as there's a report of a bombing of a facility 40 miles from the Polish border. Poland is a NATO nation. Global stock markets were mostly higher. The U.S. stock indexes are mixed at midday, but down from their daily highs. And so we also have another spread of COVID in China. Shenzhen, which is a technology hub, has seen a COVID spread. Chinese stocks dropped on the news. That has also helped to put some price pressure on raw commodity markets to start trading the week. Now, there have been some reports that this is not necessarily a COVID variant, but a whole new virus. There's been some reports in alternative media that there is something new happening in China there, and it may have even affected the Olympiads, but so far there's not been any substantiation of that news, but this is a little bit troubling there. And what could it be, a new variant? Who knows? But this crude oil going down to about $100 a barrel. Will that translate into lower gas prices? My guess is perhaps, maybe a little bit, but not much. I'm waiting to fill my tank up to see if we can get it to drop down below, where it is now by 20, 30 cents, but I kind of doubt that's going to happen. But there's some technical analysis here, but we won't go through that because we want to talk a little bit more about these drop in precious metal prices, and the sentiment for silver is now relatively bearish. There is some analysis here from the dailyeffects.com that talks about this, and it may be in part and parcel to that one thing that we talked about with some hope for the Russia-Ukraine conflict. And we'll see that there's some optimism there. Any little bit of good news, typically the markets are looking for. They want good news, even if it's a false sense of hope. A false sense of hope. And so that is kind of where we're at here. But retail trader data show 66.82% of traders are net long, with the ratio of traders long to short at 2 to 1. Their data shows that there are now at least net long silver since June 16th, when silver traded near $27.21. The number of traders net long is 4.23% lower than yesterday and 14.52% lower from last week, while the number of traders as net short is 505.13% higher than yesterday and 609.77% last week. We typically take a contrarian view to crowd sentiment, and the fact traders are net long suggests silver prices may continue to fall. That's the takeaway from those numbers. And they say yet traders are less net long than yesterday compared to last week. Recent changes in sentiment warn that current silver prices trend may soon reverse higher, despite fact traders remain net long. So, you kind of look to see where people are at in the markets, the paper markets. We know the physical markets, there's been a steady increase in demand in physical silver, hence the high premiums. But nonetheless, a sentiment is starting to kind of change a bit for precious metals as they've fallen. And what is it about this? It is market reaction. Reaction that does not necessarily make logical sense, but with hope or fear. Hope and fear are two major drivers, and neither of them can be rational many times. And so that is the effect that we're seeing with the markets there, with the situation with Ukraine. Sooner or later, just like as was the case with the pandemic, if this war continues for months and months, and maybe even years, some predict this thing could happen for 10 years, a 10-year conflict between these two nations. And if that is the case, then, well, the markets will start to get used to it. We will start to adapt, and you will likely see, more than likely, these prices continue to subside or level out, whatever that leveling out means. Same thing with inflation, by the way, too. Higher inflation or consistent inflation, and like now, we are seeing it at 7.9%. If it continues to rise and people start to get used to that, the precious metals may react and essentially stabilize to a point of levels that most of us think are undervalued, considering where we're at with inflation. In other words, will gold go up 7.9% next year? I don't know. Likely not at the rate things are going now, and especially silver. In fact, with silver's massive drop, we're looking at the numbers here, a pretty massive drop on all accounts. Gold dropped the least, which is why I've moved more towards gold, because it is not as affected by these wild swings. And this is quite evident. You go down the scale of volatility, the way these metals are listed. Look at there, silver, not quite as volatile as platinum and palladium, but still volatile. Gold, the least volatile. Palladium, the most volatile. Crazy. Only rhodium is acting out and actually increasing, but only slightly in comparison, with just over a half a percentage point. Where does that bring us with the gold to silver ratio? Now it has increased even more to almost 78 now. And as you know, I feel the gold to silver ratio really should be around the low 60s at most. But we're seeing consistently higher numbers between the gold to silver ratio. Now, what is the second thing? What is the second thing contributing that has not been talked about in this article here. In fact, I've not seen many articles talk about it, but I was reminded in my live stream last night, and I've even talked about it in a recent interview I did with an expert, and that is that the Fed is meeting this week. The Fed will be meeting, and likely there's going to be a quarter point rate hike, first time since 2018. So that the markets, I think, are reacting to that, and gold and silver, I believe, are reacting to that right now, and that's contributing to these massive drops, and I think that's going to potentially cause them to tumble even more. If we see oil drop below $100 consistently, and we see the Fed raise the rates and the stock market go up and bond yield curves move the right way, well, we're going to see these metals drop even more. Already, after I made my second gold prediction video, gold has dropped back under that point to the first prediction, $1,950. It could fall below that again, and we could see silver creep back into the $24 range again, and even lower, $23. I believe there is a strong support at $22 for silver, and I believe there is a pretty strong support for $1,850 gold, but we could see gold drop below $1,900. Palladium, it's anybody's guess where that's going to go. Same thing with platinum. But there you have it. Those are the two reasons. Those are the two things that could send gold and silver prices tumbling. Let me know what your thoughts are in the comment section below. Would like to extend a multitude of gratitude to you all for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.